Now, fiscal policy. What's the federal government in the United States doing? Well, as you can see, this shows the deficit or budget surplus of the federal government going back a few decades. And you can see early, let's go back to the 2008 recession. We went into a deficit and then we slowly kind of raised up. But notice early in COVID, we saw a tremendous plunge. And the government, the federal government and the Trump administration went out and spent money, trillions of dollars, in order to try to support the economy. Now, then that all went away, but now the Biden administration is now putting even more money. Even though the COVID crisis is near an end, they're pumping out money like crazy, and they're trying to get Congress to agree to $6 trillion more dollars of spending. Now, let me stop right here. I mentioned before nuances. The way it works in the United States is the administration with President Biden proposes a budget. The reality is the budget never passes, okay? We haven't passed a president's budget probably for 60 years, but it gives an idea of what the president wants to see. Well, he's not going to get $6 trillion. He's not going to get 5. He's not going to get 4, but he might get $1 trillion more. He's going to want higher taxes on corporations, on individuals, on capital gains. We'll talk more about that later. I don't think he's going to get those either. He's going to get some tax hikes, but not as much as what he wants. So the point of it, though, is that fiscal policy is going to remain very loose. This line is plunging, and it's going to probably break the low that we saw in 2020 under the Trump administration. Here shows the total public debt. So back in 2008, you saw that the public debt took a hike up, started to go up and really accelerated. It kind of slowed, and now it's skyrocketing again, and we're up to $28 trillion as we speak today. Now, the problem is that that people can borrow money for good reasons or bad reasons, and let me try to break it down. If I borrow money for consumption, so I want to buy a new car, I want to buy a refrigerator, if I borrow money for that, that's not really that good, because I'm going to have to work extra hard to pay back that money and pay back the interest. If, on the other hand, I borrow money so I can invest, so I want to grow my business, I want to build a new factory, I want to buy computers to help my staff work better, that could be good or bad. Generally, it's good. Generally, investment, borrowing money for investment, creates opportunity and creates wealth in a society. But borrowing money for consumption means you're destroying wealth. So when the federal government borrows money, any federal government, US or any federal government, when they borrow money for consumption, that's usually pretty bad because they have to pay it back, which means that somebody, i.e. the people of the United States, have to work harder to pay back that money, which means that their money goes to pay back principal and interest rather than having a good life, or rather than investing and making their life better. So what can happen is that when the federal government borrows money, it can boost the economy short term, but it declines the economy long term because it has to be paid back. Nothing's free. So there's no free sugar high in the economy. They have to pay it back. So this is short-term bullish, long-term bearish. Okay, to put it in another perspective, this line shows the federal debt as a percent of gross domestic product. And you can see for years, the United States had very low debt. But in 2008, it took a big jump up, and this red line is 100% of GDP. Now you can see we've skyrocketed up to, we got almost up to 140%. Let's call it 130 right now. Now, this is a critical area. In most countries, not the United States, I'll come back to this in a second. In most countries, when debt gets above 100%, that usually means that the economy starts to falter and fail. So for example, Japan has been in a recession for 30 years. What's their ratio? It's the world record, 220%. They have so much debt in Japan that literally 2 generations of people are paying it off. And there's no economic growth in Japan. Now, fortunately, they created a lot of wealth before they went into the recession, so they live pretty nicely. But many third world countries get into this problem and they become basket cases. Venezuela was the wealthiest country in the Western Hemisphere at one time. Argentina was the wealthiest country in the world 100 years ago, and then they got caught into this debt trap. Now, when you see European countries like Greece or Italy get into this problem, they go into recessions, and they always do. Now, the United States is a special case because it's the reserve currency of the world. So it can probably have a higher debt than most countries. We don't know how high it can get because, generally speaking, we've only had a few reserve currencies in the history of the world. Spain, England, maybe Holland for a short while, and the United States for about 100 years, 90 years, let's say. So we don't have a lot of experience to know exactly what happens, but we do know that a reserve currency can go into debt more than a non-reserve currency. So maybe we can go to 130%, maybe we can go to 150% without problems occurring. But the way that the government is spending money, we could easily be at 140% day after tomorrow. We could be at 150% by July. So the acceleration in the debt is very disturbing. And it's disturbing the world and putting pressure on the US dollar.